Oops, the Fed does it again, screws the small banks, markets recover all their losses from yesterday. What's up, everybody? Welcome aboard. This is Bubba's Daily Update, and well, the news of the day was the markets recovered all of yesterday's losses. So the panic selling was met with some panic buying, and here we are. If you'd been away for a couple of days, you'd think the markets were just unchanged and nothing had happened. The difference between the 2 days is volume was a little bit lighter today, but overall, not totally unexpected. We had Chair Powell talking about taking away some of the Volcker rules, and of course, making it easier for the big banks to do what they do, which is they're too big to fail already. So what else do they want to do? And again, stepping upon the little community banks, the ones that we need to run businesses. So once again, the big guys have stuck it to the little guys, and with great help from the Fed. And why shouldn't they make all the subprime loans in the world, knowing that the Fed is going to stand behind them? Just another joke of the way that certain things run in this country. But hey, it's the greatest country in the world, so we can't complain about that. But again, I'd like to see the big banks have to be a little bit more responsible with what they do. You know, we've seen it from the whale trade to all these little things that have happened over the years, and yet there they are getting bailed out once again. What can I tell you? In the meantime, markets did rally back, and of course, the Russell made another all-time new high and just exploded to the upside. Overall, you know, a fairly solid up day. Bonds were down. Now the bonds were down quite a bit, but they did rally back a little bit. So interest rates have now settled down around 2.81 in the 10-year. You know, again, we say they're going back over 3%. I think this is just a temporary from an overbought interest rates, oversold bonds. We got to bounce. So let's see how that trades out. Oil, a big up day today. But after 6 in a row down, you would expect to see a rally. And as I said on my Monday night call, I would expect to see a rally in oil this week. And sure enough, here's the rally. Gold, pretty much sharply unchanged, a little bit higher, but really hovering around that level. But I think gold's getting ready and poised to go up and test that 1330 level. And we'll see how that all pans out when it gets rolling. But, you know, again, you didn't see money running into gold yesterday. So that should have told you something. But of course, you've got the other asset classes, which is the cryptocurrencies, which are, you know, if you listen to Thomas Lee, who used to be, I think, with JP Morgan, with Citigroup, and a couple of the others, he's a well-known guy on Wall Street who believes the Bitcoin's going to 25,000 at some point. Now, again, I don't like to say that far because I'd like to see it get over 8,000 and then 9. But in the meantime, he's a believer, I think, and I think that shows you that some of the money is going into the safe haven play of cryptocurrencies right now because of a lot of the advantages that they have. So again, we're a believer in cryptos. We wouldn't take a lot and put them in there, but certainly a small percentage of our portfolios is playing in the crypto space. Grains got hammered today, and I don't think there's any surprise about that. I mean, they all came down to support areas. Wheat came down to 520, soybeans came down to 1020, the corn came down to 393. I think these are all buying opportunities. And of course, the meats, as we said, took off, and across the board, fat cattle or live cattle was up limit. Feeders were up about $3.50, and hogs were up again. So again, we're starting to see a lot of our objectives being met here. I think, again, really the whole focus here is going to be on what the jobs number look like. Today's ADP jobs and GDP numbers were not very bullish. But of course, what's truly bullish for the economy is not necessarily bullish or bearish for the stock market, right? The stock market is trading off of one thing and one thing only right now, and that still is the cheap money from the Federal Reserve. So they don't want to see something that's extra strong that would create less free money. That's as simple as I can get it. That's as simple as the plan can be. In the meantime, I would say that you want to look at oil. 69 is probably a good spot to maybe sell it. We're now buyers of grains at these levels. The meats, we're looking for a pullback to buy again, but are long looking for them to go higher. Equities continue churning. Okay, if you look at a chart, yesterday we came all the way down to a great support level and popped. So again, we're going to continue to maintain the observation and looking for the markets to break out in one direction or the other. They have not done so yet. So we will continue to hang tight and watch these markets and observe and looking at individual plays. And that's really the best way to trade some markets like this. I mean, if you looked at it Today, it was as dull as could get most of the day once we had the big pop. So we'll see what it looks like. We'll be back tomorrow with more of Bubba's Daily Update. This is Bubba's Daily Update, and I am Todd Bubba Horwitz. And of course, I want to remind you, if you'd like to help us out, highschoolinvesting.com. You can certainly give us a hand there. We're going to have to make a decision this summer on whether or not we're going to keep the program going or not, because the expenses keep piling up, and I'm tired of supporting it all by my lonesome. So in the meantime, if you'd like to help us out, go to patreon.com/Bubba Trading. In the meantime, don't forget to catch the Bubba Show every day from 4 to 5 Eastern at LibertyTalk.fm. This is Bubba's Daily Update. Have a great day, everybody. We'll see you back here tomorrow on Thursday. Bubba's Daily Update.